Let's look at an example of a finance lease from the perspective of the lessee and where the lease payments are at the beginning of each year. This is more standard for most lease agreements. It's a 3-year lease term, $50,000 annual payments, and we're recording the journal entries for the start of the lease, December 31st, 2025. Now, when we have lease payments at the beginning of the year, if we want to determine what is the present value of the lease payments, we would take the $50,000 lease payments. You can use Excel to calculate this present value function. Or if we're going to use our present value factor tables, if it's the beginning of the year, each year, then we are going to click on this present value of an annuity due. So if it's a present value of an annuity, if the payments are end of year, present value of an annuity due, if it's the beginning of the year. I want 3 years, 7%. I come down to this 2.808. Take my 50,000 times the present value factor, 808, and I'm going to get the 140,401. This is based on n equals 3 years, I equals 7%. But we're given this amount, and we are asked to record the journal entries on December 31st, 25. We're going to debit to increase the right of use asset. And credit to increase the lease payable, or that liability. And then immediately we're going to have this cash payment. So we're going to credit to reduce cash for $50,000 and debit to reduce the lease payable. Could we have recorded this as one net journal entry? Absolutely. I'm going to start with my T accounts before I go any further so I can start tracking the changes and the balances. Okay, so at the end of 2025, we have a balance in the lease payable account. What we're going to report on the balance sheet is going to be $90,401. And we haven't changed the right of use asset. That's not going to decrease until 1 year has passed and we record the amortization. B says record the company's entries for 2026 and note what would happen to the financial statements. So 2026, we have a cash payment. I'm going to leave room for 2 debits. My cash payment is a credit of $50,000. I know that I'm going to record interest expense. And I'm going to record a reduction to that lease payable account. Interest expense is equal to the beginning lease payment, lease payable account, $90,401. Multiply that by 7, and I'm going to get $6,328. The rest of this cash payment is a reduction in principal. Reduce that lease payable liability by $43,672. Let me post this journal entry here. This is going to give me a balance in the lease payable account. It's going to go on the balance sheet of $46,729. I need one more journal entry in 2026, and that's for my amortization expense. decrease the right of use asset. 140, 401 divided by, allocate this across the 3 years that we're going to use the asset, and we get 46,800 that will be reported as amortization expense each of the 3 years. So the balance that we have at the end of 2026 will be 93,601. So what will be reported on the balance sheet at the end of 2026? We have the right of use asset, its balance of 93,601, and we have the lease payable, lease liability or lease payable account with its balance of 46,729. What do we report for the year-end 2026 income statement? We have amortization expense, 46,800, and we have interest expense, 6,328. We go into the next year. This is part C, entries for 2027. We're going to have a cash payment, 50,000. We're going to have interest expense. My interest expense is going to be the balance in that lease payable account, 46,729, multiplied by the 7% interest rate. And this is going to be 3,271. And the difference between my cash payment and the amount that relates to interest expense is going to be the reduction of that lease liability or the lease payable. I'm going to post this decrease to my lease payable of 46,729. And what do I see here? I've made 3 payments, payment 1, payment 2, payment 3, and I brought my lease payable balance down to 0. So this is the last time I'm going to see the interest expense. And that makes sense. In year 1, the entire amount went to reducing the liability. In year 2, 6,000 went to interest expense. In year 3, 3,000 went to interest expense. So my balance is now 0. The right of use asset I need to amortize. So I'm going to debit amortization expense. Same amount that we had before, 46,800. I'm going to credit to reduce the right of use asset. I'm going to post this, decrease 46,800. Now we're going to have, in that last year, we're going to have no lease liability, but we are still going to have a balance in the lease asset. That's because we had that payment in year 1 with no amortization, or on day 1, no amortization on day 1. So start with 93,601. We decrease 46,800, and our new balance is 46,800. That represents the last year's value of the right to use. So it's going to go on the balance sheet. Put it here, balance sheet. Is going to have the right of use asset only, no lease liability. And the income statement reports amortization expense and interest expense. Finally, in 2028, we want our last year's amortization. Debit to increase amortization expense. Credit to reduce the value of our right-of-use asset. When I post this journal entry, I now have no balance at the end of 2028 in my right-of-use asset, which is exactly what I want. The lease is now completely done. My balance sheet shows nothing. The income statement doesn't have any interest expense. It simply has the amortization expense of $46,800. And we've accounted for everything here. That concludes this problem.